Struggling to find more clients for your life insurance? He has 3 ways to bring in more leads without spending a penny. Number 1, referrals from new and existing customers. Do you know how to get referrals properly and effectively, like I have in 2 different companies? You need a script, you need a process, you need to know the timing of when to ask and how to ask. And that's new customers, by the way, and your back book. Yeah, because you can definitely get them through your back book. Contact. Number 2 is contact your back book. Number 2 is contact your back book for a review. People who've already bought from you are more likely to buy from you again in the future. People's circumstances change. You need to contact your back book with a script and a process to set up a review. And then you look for the angle, you look for what they need and if they've had a change in circumstances and if there is an opportunity to upsell, resell, cross-sell. Yeah? And the last one is to regularly post on socials. It's to regularly post on social media. So many people get this wrong. They do the odd post here, the odd post there. They are not regular and consistent enough. You're missing an opportunity. Every single one of your target market, whatever your target market is, whether it's mortgage customers, life insurance customers, self-employed people, doctors, nurses, builders, high net worth individuals, whatever it is, they are on social media. You need to regularly post to attract them. Design your content around your target market and you will start to attract them with time. So those are 3 ways to generate more leads without spending a penny. 3 massive mistakes that mortgage and life insurance brokers are making regularly that is preventing them selling more life insurance. Number one is they are not asking enough questions. I see some brokers who I've worked with in the past. I've either trained them myself, they've worked for me, or I've trained other people's sales teams. They are just not asking enough questions. They are rushing the fact find. They are just asking the questions that are needed to do an application. Yeah. But there's a lot of questions that are not needed just to do the mortgage app or the life insurance app that you need to ask in the fact find. Yeah. They are just not asking enough questions and they are just following it by the book. And there's obviously questions that you've got to ask for compliance and purposes and to do the application. But there's certain questions that you have to ask to do this properly. They're just not asking enough questions. Number two is they rush the close. So what they'll do is they'll do the full fact find, they'll get to the end, they'll present the product really quickly and say, well, this is what it does. It pays 100 grand if you die, 50 grand if you get critical illness, pays the mortgage off, whatever. It's rushed. What you should be doing, you should be spending time on your close. You should be explaining to them, this is what it does, this is what it pays out for all these reasons, all these different illnesses. This is why I think you need it. This is what you could use the money for. This is why other people just like you take it. This is what it's going to cost. This is the T's and C's. This is the features and benefits. You're not rushing the close. You're selling. You're a salesperson. You're a financial advisor, mortgage broker, life insurance broker. You're in sales, right? Don't rush the close. And the last one, they are not creating enough desire. They're not identifying the problems, the pain points, the pleasure points of the customer. Now, you do this through your questioning. You've got to identify their problem, their pain point. If something happens, what is going to happen? If you don't have savings, you don't have cover in place, you've got a mortgage, you've got debt, you're self-employed. If something happens, you've got to press on the pain and the problem, identify it, elevate it so that it is clear. Yeah, if you don't do that, remember, they are making a price-based decision, not a value-based decision. They are making a decision based on, do I really need this life insurance? It's 50 quid a month. Probably not. If you take them there and you make them realize, like, if shit hits the fan, you're in trouble financially, then it's like, which one am I going to go for? It's not, am I going to go for it or not? It's which one. Yeah. And you can only do that by creating enough desire, identifying the pain and pleasure points and the problems that the customer has, and presenting a solution. Yeah. The only way. And if you're not doing any of those, you will not sell as much life insurance as somebody that does. Crack those 3 and you're going to sell more protection 1,000,000%. 3 ways to close more life insurance and mortgage sales without looking too salesy. Many brokers push far too hard and just look like a desperate Dan. Okay? There's a few different ways that you can do this. You can use a consultant style close. A consultant style close isn't, do you want to go ahead right now? It's, I'm giving you all this information, and based upon this situation, this is my professional advice. This is what you need. And they're a good tone of voice, nice professional manner. It comes across as a consultative type close opposed to a salesy close, yeah? Being too direct sometimes can push clients away. If you ask the right questions throughout the fact find, you can get a client to almost tell themselves what they need. If you just say you need some life insurance because you've got a mortgage or because you've got kids, you're telling them there, aren't you? You're being a salesperson. If you say what would happen if you died, how would you continue to pay your bills and your mortgage? Right, well, I couldn't. Okay, so, what would you do about that? What would happen then? Well, I would probably lose the house. Then what would you do? Well, I would have to go into rent it, and how would that make you feel? Oh, well, obviously not very good. So what we can do is we can leave this problem with Aviva, or we can leave this with your wife and kids. Which one would you prefer? Oh, yeah, I want to leave it with Aviva. You can just ask certain questions to get the client to identify and speak up to say that, yeah, I do need it. And then you don't come across as pushy because they've came up with the answer, haven't they? But you can lead them down the path so that they answer in a way that identifies what they need. Yeah. When you tell somebody what they need and you say, this is what you need and why, and you're quite stern, you're not a consultant, you're too direct, they just feel like they're being sold to. You can ask the questions so they identify what they need, but you can also tell them things like, or say things like, so other people just like you will do this. So other people who've got a mortgage and who are self-employed and don't have any savings, what they'll do is this. Coming across as a bit consultative. And the reason why they do that is this. So I'm not telling them directly, you need to do this. I'm saying people like you do this. And that's an indirect way of getting the same outcome. Yeah. So there are 3 ways where you can close more life insurance and mortgage sales without coming across as pushy. So the repeat business cycle. You start by selling to a customer. Now you must, if you want to resell to that customer over time, you must give them a great experience. That's a good fact-finding process. They're like the sales advisor, whoever they're speaking to, a good post-sale process. You do what you say, you deliver, you do stuff on time. Yeah, you give good advice and you do the right thing by your customers, and then they are receiving a good experience from you and your company. Then you do multiple touch points. Now this is key. This is, you might send them email, you'll get a post-sale email. You might send them an email every month, a newsletter of some sort. You might add them on social media. Once they've got you on social media, you might be doing 1 post a day or multiple posts over a space of a week, so they are seeing you on social media. You might want to send them a letter every quarter. You might want to send them a birthday card. We used to do this at Bespoke and Mortgage Genie. We used to send them birthday cards, Christmas cards. You might touch base with them every 6 to 12 months and do a bit of a review. Yeah? But they need multiple touch points, because if you just think you're going to sell to somebody in January 2024 and then expect to sell them January 2026, they've got an okay experience and you haven't spoken to them since for 1 or 2 years, you're going to struggle. You need the multiple touch points in between sales. And if you're reviewing customers every 1 or 2 years, I would say at least 4 touch points a year minimum. They need to see you, be reminded of you, hear from you on the phone, on email, on text, on WhatsApp, in order to get multiple sales and get that repeat business going. And what it also helps with, once you've resold to somebody, a nice little bonus is you're going to get additional referrals. Because once somebody's bought off you twice and 3 times, they are going to give you referrals. Because they know, like, and trust you, and you've built a relationship based upon great experience and good customer service and keeping in touch with the customers. So that is the repeat business cycle. So objections. A lot of salespeople, a lot of financial advisors and brokers poo the pants when they get an objection, right? An objection isn't a definite no. An objection is you need to work a little bit harder for your money. Yeah? So a great way to reframe and get round an objection is 3 things. Is you acknowledge the objection. Yeah, to be honest, I think it's a little bit expensive. I understand exactly how you feel. Or understand what you're saying. You've acknowledged it, you've emphasized, and they're a little bit like, what do you mean? You then reframe it. I understand what you're saying and why you think it might be expensive. But in comparison to not having it, if we're talking about life insurance, in comparison to not having it, heaven forbid something happens and you lose your income overnight, you're unable to work through an accident or sickness, and you then lose your property, your wife and kids then have to move out of the property, you have to move to rented accommodation and sell your property, that's probably more expensive than the £50 a month that you're going to pay to Aviva. So you're going to reframe it in a different way. There's lots of ways to do this. There's the feel, felt, found technique. Understand how you feel. A lot of other people felt the same, but what I found is this. The found is the reframe. You change their perception or their mind or their view, their opinion on whatever they've objected about based upon what you say. And then you spin it back to an options clause. If you're bringing somebody up for an appointment, trying to book an appointment in, to be honest, I'm too busy, Terry. I understand what you're saying. You know, to be honest, I'm dead busy as well. I'm rushed off my feet, actually. But that is exactly why we do appointments over the phone. We don't need to come and see you. We can do it fully over the phone or on Zoom, and it only takes about 5 or 10 minutes. So with that in mind, Mr. Customer, is it best to see you tonight or tomorrow? Or I can do actually 6 o'clock tonight, or I can do 8 o'clock tonight. Which time's best for you? Options closed. I've acknowledged it, I've reframed it, and I've pulled them back to an option. Yeah, this works in most objections. You just need to slightly tweak it, what you're saying. So that is an objection handling formula for mortgage and life insurance brokers that you can all use straight away. If you are getting the objection when you position your life insurance of it's too expensive, there's certain things that you need to consider. So let me explain. Now, price objections, as in it's too expensive, are a sign of interest, okay? This isn't, I'm definitely not going ahead. This is a quite easy thing to turn around if you know how. Now, a few different things you can do here. If you said it's too expensive, I would personally self-analyze and think you haven't identified the problems that the customer has and pressed on them enough, because if you had, they wouldn't be thinking it's too expensive. They'd be thinking that problem's really big, I need to solve it. Yes, I want to go ahead. Okay? That's one thing to consider. The other thing is, like, are you presenting something that is literally too expensive? If they only earn 25 grand, trying to sell them £200-300 a month, it might be too expensive. Okay? If they say to you, it's too expensive, I didn't think it would be that much, Terry. Okay, it's expensive just out of interest. It's expensive compared to what? What can they say to that? Compared to what? Well, John down the pub, he's only paying 20 quid a month. Okay, so is it exactly the same? Is your financial situation, mortgage, saving levels, everything, same amount of kids, same ages, income levels, exactly the same as John down the pub? Well, I seen it online in Beagle Street or whoever is only 10 quid a month. Yeah, so do you know the T's and C's of those? Is it the same quality? Is it like for like? You can't compare apples and oranges, right? They're different. And you do get what you pay for. Yeah. But when they say it's expensive, you say compared to what? Because then they'll raise normally quite a stupid objection, like the me mate down the pub only pays this, or I was only thinking it was going to cost this much. Yeah. It's either you haven't pressed on the problem enough, identified the problem enough, or you ask them compared to what. Easy way to do it. It works a treat. So objections. A lot of salespeople, a lot of financial advisors and brokers poo the pants when they get an objection. Right? An objection isn't a definite no. An objection is you need to work a little bit harder for your money. Yeah? So a great way to reframe and get round an objection is 3 things. Is you acknowledge the objection. Yeah, to be honest, I think it's a little bit expensive. I understand exactly how you feel. Or understand what you're saying. You've acknowledged it, you've emphasized, and they're a little bit like, what do you mean? You then reframe it. I understand what you're saying and why you think it might be expensive. But in comparison to not having it, if we're talking about life insurance, in comparison to not having it, heaven forbid something happens and you lose your income overnight, you're unable to work through an accident or sickness, and you then lose your property, your wife and kids then have to move out of the property, you have to move to rented accommodation and sell your property, that's probably more expensive than the £50 a month that you're going to pay to Aviva. So you're going to reframe it in a different way. There's lots of ways to do this. There's the feel, felt, found technique. Understand how you feel. A lot of other people felt the same, but what I found is this. The found is the reframe. You change their perception or their mind or their view, their opinion on whatever they've objected about based upon what you say. And then you spin it back to an options clause. If you're bringing somebody up for an appointment, trying to book an appointment in, to be honest, I'm too busy, Terry. I understand what you're saying. You know, to be honest, I'm dead busy as well. I'm rushed off my feet, actually. But that is exactly why we do appointments over the phone. We don't need to come and see you. We can do it fully over the phone or on Zoom, and it only takes about 5 or 10 minutes. So with that in mind, Mr. Customer, is it best to see you tonight or tomorrow? Or is it, I can do actually 6 o'clock tonight, I can do 8 o'clock tonight. Which time's best for you? Options closed. I've acknowledged it, I've reframed it, and I've pulled them back to an option. Yeah, this works in most objections. You just need to slightly tweak it, what you're saying. So that is an objection handling formula for mortgage and life insurance brokers that you can all use straight away. So are you getting it's too expensive quite a bit from your customers? You position the life insurance off the back of the mortgage. It's too expensive, Mr. Broker. Okay, so what you've got here is you've got a price and value seesaw. Okay, if you haven't asked the right questions in the fact find, what they are focusing on is price. And price will then be forced down, and that will be how they are basing their decision. It will tip the scale, it will tip the seesaw, and make a price-based decision. And when it's a price-based decision, it comes out that, oh, I don't really need that, it's too expensive, 50 quid a month, 100 quid a month. However, when you make a value-based decision, when they make a value-based decision, and you ask the right questions in the fact find, and they can see the value and see why they need it, the price becomes less and less relevant because they know that they need it. And how do you get to that stage? The only way to do that is the questions in your fact find. If you're just saying, yeah, you need 100 grand of life insurance in case you die, like, that's a price-based decision. That's not valuable. You need to take them to it. So what happens if you actually died? How would you stay in the same property? What would your wife and kids do? How would you pay the bills? How would you keep your car in your house? How would the kids go to after school clubs? How would you put food on the table? And you build in value so they're like, yeah, actually, you know, I do need it. Then it becomes less and less about price and more about value. When it's about value, it's like, which one do I want to go for? Which package is best for me? Yeah? It's not, how much is it going to cost? Oh, okay. See what I'm doing? And the only way to tip this seesaw either way is your questions. Yeah? Just get good at your questions and you'll completely get rid of this. So, your customers will make a decision based on the problem or the premium. Let me explain. If you haven't identified the problem with the customer, you haven't showed them that if they die or if they get cancer, heaven forbid something happens to them, that there is a problem. They may struggle to pay the mortgage, they may struggle to stay in the same house and pay the bills and all of that. If one income is removed, they may struggle. What you're doing there is you're identifying the problem and you elevate and you press on the problem so that the customer understands it, yeah, and realizes that it's true that they have a problem. And when you elevate that problem and emphasize it, the problem goes right up here on the seesaw, okay? Then the premium becomes less and less relevant. So it tips it right down. The problem is the thing that they're focusing on, not the premium, yeah? And when that happens, they're going to buy because they think, yeah, we've got a problem, we need to solve the problem. But if you haven't identified the problem well enough or pressed on it enough, it tips the other way. Then it's all about the premium and the problem goes down. Then the focus on, right, what does this actually cost? Do I really need it? Is it that important to me? The problem is down because you haven't pressed on it. The premium is up, they're focusing on price. Yeah? So make the problem so big that the premium doesn't matter. Yeah? So how to follow up your life insurance and mortgage customers without feeling or looking pushy. There's definitely things you should do and there's definitely things you shouldn't do. You definitely should not ring them up and say the word just. I'm just following up. I'm just checking in. It's the worst thing you can say because basically means I want your money. Will you tell us if you're going to give us some money or not? Right? It's the worst thing you can say. You should not appear desperate. If you appear desperate and you ring too many times, you follow up too many times, and you're overly keen, they will back off because they will feel like you are trying to sell to them. And nobody really wants that deep down. Okay? What you do want to do is you want to appear busy. You want to appear like you don't really need the sale. Not in a push back way, not like arrogant way, but it's like you're bringing them up. Hi, such and such. Yeah, I've still actually got your case open and live on my desk or on my CRM, and I just really need to know what's going on. Actually, I've got it sat there, and I was a little bit concerned because I've actually been so busy. I haven't even had a chance to come back to you. I'm just concerned, obviously, you don't have anything in place at the moment, and it's still open on my desk. So, do you want us to get this wrapped up for you? Were you thinking about option one, or were you thinking about option two? I'm being assumptive there. I'm saying, it's still open and live on my desk. I've said that, I'm a little bit concerned that they haven't done it, but in that conversation, I'm not coming across as desperate, am I? I'm not coming across as like I'm just trying to get the money or trying to push a sale on them. I'm just coming across as busy, and the case is still open. And if they want to get it boxed off and they want to get it set up, which option do they want to go for? And you go back to an options clause. Yeah, they're two very, very different outcomes. I'm just following up. I thought I'd see if you want to go ahead yet. Just checking in. You want to go ahead, ringing every 2 minutes, desperate, no good. So there's some do's and don'ts if you want to follow up and not look pushy. So there are three types of buyers when you're looking at life insurance and you're looking at mortgages. Okay, there are logical buyers. The logical buyers buy based upon numbers. They want to know the ins and outs. They want to know the price of the mortgage over the full term. They want to know the ins and outs, the data, the claim stats. They are very logical. They are very detail focused and orientated. They need to know all of the numbers and the T's and C's. They're that type of buyer. There's an emotional buyer. A lot of people are emotional buyers. Emotional buyers will buy life insurance on the back of peace of mind. That's when you talk to them about things like, so heaven forbid if you were to die, at least this way your wife and kids are going to be able to stay in the same property. They're going to get a lump of money, and they're not going to have to worry about money. They're not going to have to leave the property. At least this way you've got peace of mind that heaven forbid if something does happen, you're going to be protected. Giving them the peace of mind. I imagine you really want to ensure that heaven forbid if you did die, that your wife and kids are looked after financially. So you've got that peace of mind. Would you agree? You say things like that to them, and that gets emotional buyers because they are thinking about, yeah, you know what, it's emotional. I need that protected. I want peace of mind. I want to feel like they are protected and feel like I'm doing the right thing. Yeah. And the last type is a fearful buyer. So a fearful buyer, with these type of people you talk about, so what would happen if, you did lose your job tomorrow through an illness, or you got cancer and you couldn't work? Well, me income would stop. Okay, so then how would you continue to pay the bills? Well, I couldn't. Okay, so then what would happen after that? Like, would you get kicked out of the house? Oh God, I wouldn't want that to happen, would you? Okay, and then what would happen? Would you still be able to go into the same after school clubs with the kids? Would you still be able to have the same car? Would you still be able to have the holidays? No, I wouldn't. Would you end up getting evicted? Yeah, potentially. Okay, so we probably need to solve this problem, don't we? Would you agree? That's fear. And this isn't, by the way, in a bad way, because all I'm saying there is the truth. If someone's got no sick pay and they've got no savings, shit will hit the fan if they are off work, right? It will. Let's call a spade a spade. It will. So you're not misleading anybody here. You're just focusing on the truth in all instances. They want numbers, data, logic. They want the peace of mind of how something would feel, make sure that they're protected. And the fearful people need to understand that if that does happen, then it could be quite challenging and difficult. So we need to do something about this. Yeah, there are the three types of buyers for life insurance. If you want more tips like this, the 80-20 rule. We've all heard of this. We all know what this is, but it massively applies to life insurance and mortgage sales. 20% of the questions you ask in the fact find will determine 80% of your results. 20% of the products that you sell will perform for 80% of your income. If you've got a team, 20% of your sales team will produce 80% of the revenue. You can apply this to loads of different parts of financial services. But a big part of this is your sales process, okay? So 20% of the things that you do in that fact find and in that appointment amount for 80% of the results. What you need to do is you need to master that 20%. Your introduction, your question and techniques, the timing of when you introduce the referral script, how you then close and present the product. That's only 20%. The rest of it is fluff. But the 20% in your fact find determine 80% of the income that you get, 80% of the results that you get. So you've just got to master those key parts of that fact find to sky. So the trust triangle, yeah, these 3 points must be met in order for someone to trust you. And they are only going to buy your products and services. They're only going to buy life insurance, income protection, critical illness, do the mortgage with you if they trust you. Okay? So the things that are needed in the trust triangle are credibility. You need to show that you are credible. They need to believe that you are credible. You need to say the right things about yourself and about your company in order for them to think this person is credible. I'm going to trust them. Yeah? They need to be likable. You've got all the basics about likability, eye contact, body language, smiling, being polite, making them laugh, having common ground with them, building rapport. They've got to like you in order to trust you. And the last thing, you've got to show experience. You've got to come across as experienced, because if you come across like you lack experience, they are going to think, can I trust this person's advice? Is he giving me the best deal? Am I getting the best advice at this time? Should I check with somebody else? But if you are credible and they believe that you are, their perception of you is that you are credible. They like you, yeah, subconsciously and consciously. There's ways to do this that I teach as well. Quite a big topic that is overlooked. And you are showing your experience, and you work for an experienced company, and the way you give advice and carry yourself and do the fact find is showing experience, they will trust you. And that, my friends, is the trust triangle. Most brokers are ruining sales in the first 5 minutes. So don't be one of them. And what they do is they pitch too early. So let me explain. So there's a 6-step process to sales, and I teach this in detail in the Wealthy Advisor Club, from introduction to your closing techniques. You then do a summary, they then do a presentation, you pull the rug and you close. So I'll go through those 6 steps in detail because it's a huge module. It's the killer sales process I've used in 2 businesses to generate millions in commissions, right? But it's a 6-step process. But when you go for the pitch too early, before you've asked the right questions, before you've presented solutions, before you've pulled the rug, and you try and pitch too early, you become that salesman, right? That saleswoman, that salesman that nobody wants to deal with. The pushy double glazing salesperson, the pushy car salesperson that nobody likes, nobody wants to deal with, who gets ghosted constantly, right? Like, nobody wants to deal with that person. And a simple solution is, of course, you've got to get the sales process right, but you don't pitch too early. In fact, you can't really pitch with proper advice until you've asked the right questions, identified the pain points, identified the dream outcomes, where they want to get to, why they need cover, what the emotions are behind it, what they want to happen when they die, what they want to happen when they get cancer. You've got to explain this to them by asking the right questions during that step process before you pitch. Pitching too early, talking about products too early, it just results in one thing, and that is a reduction in closing, a reduction in your conversion rates. And who wants that? It's not good for the customers because they don't get protected properly. And it's no good for you because you make less money. You can't progress your business. You can't scale. Like, all coming from just pitching too early. So you've got to know when to pitch, how to pitch, and what to do before you pitch. And I cover this in detail, step by step, each part of the process, what to say, how to say it, bit by bit, so you can implement it. And people who learn this, you've probably seen the testimonials by now, literally one session. People are then generating thousands in commission by doing one session with me in the community, learning this, implementing it, increasing sales overnight. And that's not just me saying it, there's proof that people are doing it in the community. So if you want a piece of this, you want to learn it, you can come in on a free 7-day trial and learn all about it. Implement it, see if it works for yourself, because I know it does. Mortgage and life insurance brokers, you are leaving money on the table if you don't do this after the sale. In the Wealthy Advisor Club, I teach upselling techniques, cross-selling techniques, ways to get referrals, ways to get bigger premiums, ways to ask better questions. And these are all timed throughout the fact find at different stages. The upselling and the cross-selling,
I even teach post-sale ways to do this. How you do reviews and rebrokes to your customers effectively. But the key to getting referrals is the time that you ask. It's mentioned at the IDD, then it's mentioned at point of sale. And if you ask, right, if you ask for one or some referrals, right? Some people do this. They actually ask for referrals, but they get it wrong. They ask for some, if you got some names and numbers, if you got some, right? Some could mean anything to the customer. And if you ask for one, you typically only get one or none, right? When you ask for one or some, you get one or none. If you ask for three, you sometimes get two or three. If you ask for five, you sometimes get 4 or 5. If you ask for 10, you get 8 to 10. See the pattern? You get what you ask for, right? But if you're asking for some, or if you're not even asking, you've got no chance, have you? You're definitely not going to get any. If you're asking for one or some, you're going to get minimal. If you're asking for 3, you're going to get 2 or 3. If you ask for 5, you're going to get 4 or 5. If you ask for 10, you're going to get 8 or 10. The more you ask for, the more you get, right? And often customers actually just, let's say you ask for 10, they'll get to about 6 and they'll say, well, how many is that? Because they are doing what you say, they are aiming for the 10. Why? Because you've showed them cap. You've seen other videos on this. Credibility, authority, perception. They know, like, and trust you. You've done the right things. They trust your advice. They like you. Why wouldn't they refer you to their friends and family? Why not? Referrals are free leads. If you got 8 referrals per customer and you only close 4 of them, how much is that worth to you? Your average case value is $1,000. About $4,000 per customer additional just by asking for 10 referrals in the right way. If you don't know how to ask, join the Wealthy Advisor Club. I teach you in detail. And it's not just me who's getting referrals, and it's not just my team who used to get referrals. There's people joining the community who've been in the industry 20 years, learning this, implementing it, and they are now getting referrals. Like, this works, right? You've just got to know how to ask in the right way. Position it right and ask for the right number at the right time, the right tone of voice in the right manner with the right cap on, and you're going to win. Never ever say this at the start of a phone call with a customer. If you say these words, I truly believe that it sets the wrong tone for the rest of the phone call. Whether it's a new lead, whether it's the start of a telephone sales appointment, you never ever say these words. And these words are, sorry to bother you. Sorry, particularly. When you start off a phone call by saying, hi, is that John? Hi, John, sorry to bother you. Why are you saying sorry? For one, you're setting off the tone in the wrong manner. And what you're doing is you're giving them the power. By saying, I'm sorry to bother you, you are giving them the control. Therefore, they are a lot more likely to just turn it back on you, especially if it's a new lead, right? Hi, John, sorry to bother you. I've just received your inquiry. Sorry to bother you. Just giving them a reason to say, or giving them the power to say, I'm too busy. Can you ring us back? Just don't say, I'm sorry to bother you, because you're not sorry, for one. Why would you be? Because you're trying to help them. Yeah, they should be sorry if they don't answer the call, because you're trying to help them, right? But you just do not say sorry to bother you. And we tested this in sales calls. By saying I'm sorry to bother you at the start and not saying it, you converted more by not saying it. Again, these are simple tweaks to your sales process or your sales calls that matter, because little things matter. When you start to get the little things right, they all amount to a big thing. And when you start to think that the little things don't matter, all of a sudden 5 or 6 or 7 little things that you don't do that you should do amounts to a reduction in closing rate, reduction in the protection penetration, and you're closing less just by thinking the little things don't matter. So never, ever, ever say sorry to bother you. People don't buy life insurance. They buy the emotion and the peace of mind that life insurance gives them. Let me explain. So you've got logic down here and you've got emotion up here. Okay. Now this is a scale. Okay. Some people, right, will buy with logic. Some people need to know numbers. Some people need to know data, stats, exactly what it's all about, okay, in order to make a buying decision. Some people buy purely upon emotion. That emotion could be the peace of mind that if they die, they want to make sure that the family gets some money because they want the kids to be looked after, the partner to be looked after, stay in the same property. That's an emotional thing, right? The logic is the mortgage is paid off in full and the wife gets 50 grand so then she can pay the school fees and she can go to work and she can have 2 years off work. That's logic. It's data, it's numbers, yeah? Now, I believe, certainly in my experience, most customers are up here. They've got a little bit of logic, but they're certainly more towards emotion, right? Of course, you get customers down here. They're the ones who say, "Will you email it over? I just want to read through it." Because the emotion's not getting them. The questions that you're asking them isn't bringing emotion out. Maybe you want to get better questions. But some people will still want logic and numbers. Then you draw it out with them. You do a share screen and you show them the numbers, what it'll do for them, the price, the sum assured, the term, the stats, and all that. Some people you're just talking about this is what it's going to do for you, and that's all they want to know. They're not that bothered about the premium, they're not that bothered about the claim stats and all of this. They just want the peace of mind, yeah? So what you need to do in your fact find, you need to cater for these type people, these type people, these type people, and these type people. In your fact find, in your questioning, you need to give them the data because you don't really know at point of sale, certainly in the fact find early on, you don't know if they're a logical buyer or an emotional buyer. So all you can really do is bring out both logic and emotion through your questioning, through your presentation, throughout the fact find to draw them in. It's the only way to do it. But some people will only do logic and say, well, these are the numbers, this is what it does, this is what it pays out, with no emotion. Some people will only talk about that and not that. Get my point? You've got to bring out all different types of people, the more logical or the more emotional people, and the people in the middle. Yeah, by your questioning, by the things that you say throughout. So if you like stuff like this and you want to learn a little bit more about how to cater for logical buyers or cater for emotional buyers, it's covered in depth in the Wealthy Advisor Club. We'll go through closing techniques, we'll go through sales processing, we'll go through the questions that need to be asked throughout the fact find to cater for both types of people. And once you understand that and know that and you can use both, you simply sell more protection. You simply sell more mortgages. You can charge a higher fee. You get better retention of customers and more referrals because you know how to work it. You know how to work the system. Are you relying on clients to magically send you referrals for mortgages and life insurance? He has a smarter way. So you must plant the seed. Yeah? And you must do that before you ask for the order, before you ask for the referral. And you do that in your initial disclosure document before the fact find. Now, we'll go through a full script in the Wealthy Advisor Club of exactly what to say, but you must plant the seed before the fact find if you want to ask for referrals, and you mini close them. If you think I'm professional and you like what I do, are you going to refer me to between 5 and 10 of your friends? Of course I will, because you haven't even tried to sell them anything yet. If you think I'm professional and you like what I do, will you refer me to 5 to 10 of your friends? And you say that early on before you've even pitched them anything, they're not going to say no, right? There's more to it than a full script in the community, but you've got to mention it early doors, right? Then you do it at point of sale. Not when you get the mortgage offer, not in the second appointment, not when the policy's being accepted, not when it's in underwriting, at point of sale. When you are closing the deal, you get them there and then because their motivation to work with you is at its highest point. Their desire to work with you is at its highest point. What they think of you is at its highest. They know, like, and trust you. That is at its peak at point of sale. Yeah? So you've got to be asking a point of sale because that is the best time to get them. We've tested this over 2 businesses over many, many years. Many, many brokers I've taught this to. Point of sale is the one. Yeah? Then there's multiple follow-ups. You all know that referrals are warm to hot leads. They are often free. They are a great way to generate leads. They are often quality customers, quality leads that are really, really profitable. Like, it's our duty and responsibility as brokers to do follow-ups with our customers to make sure we get referrals. Now, I talk about different stages to following up over a pace of 2 weeks post-sale in the club, right? In the community. But there's multiple times, and even if they give you referrals at point of sale, we still do follow-ups and we get more referrals. Bespoke Financial was built on referrals. One of the biggest brokerages in the country was built on this model. At the IDD stage, at point of sale, then multiple touch points, multiple follow-ups after sale to get more and more referrals. So don't rely on luck. Don't just wish and hope that they're going to send them. Get the process nailed down, because this is the smarter way to get referrals. The close of a mortgage or protection sale doesn't happen at the end of the fact find. It starts during the fact find. The way to sell properly and make your close easy is you follow a 6-step sales process. And I teach this within the Wealthy Advisor Club. It's your intro. It's your questions, which is your fact find. It's then a summary. It's then the presentation. It's then pull the rug. It's then a close. That is the 6-step sales process that you follow to make your close easier, to close more, and for the customers not to feel like you're pushing them. You're guiding them down a path to identify the problems in the situation so you can present a solution that works for them. Your close is so much easier if you get this right, because you're identifying the truth, the real problem that they have, and you're just presenting multiple solutions and asking them to pick which one. Nobody feels like you're being pushy. Nobody feels like you are pressing them or pressuring them into buying anything, because you're being a consultant. You're asking the right questions in a nice manner with a nice tone of voice, doing things the right way to simply help the customer. And when you get this right, the close is easy. The close isn't tough. You just close more. It's natural. It flows. And I've proven this to work over many, many years in 2 different brokerages that I built that went on to generate millions in commissions. Like, this definitely works. And I teach you in depth, in detail, step by step for each of the 6 steps, in detail, what to say, how to say it, what tone of voice, the timing of it, all detailed and explained.
The 6-step framework for financial advisors, mortgage brokers, and life insurance brokers to sell more protection pretty much overnight if you follow this. Step 1, introduction. In your introduction, you need to come across as credible. You need to show authority. You need to show credibility, experience, likability. Because they're not going to buy off someone that they don't like, and they're not going to buy off someone who's not credible. Once you did the introduction, you're then moving into your fact find, where you're going to ask the right questions. You've got to ask the right questions throughout the fact find to identify pain, identify desired outcomes, problems that the customer has, so you can solve them. Yeah? What you then do is you summarize. So basically what I'm doing there is I'm pressing on the problem. So doing the fact find, ask the question. So basically, just to confirm, Mr. Customer, you don't have anything in place, you don't have any savings, you don't have this, you've got a mortgage, you've got debt, you've got this, but you don't have anything in place to cover this. Is that correct? Yeah, okay. All I'm doing is pressing. Yeah, then you present the product. Yeah? You present the product that is in alignment with what their problems are. If they don't need income protection, you don't talk about income protection. If they are not bothered about critical illness, then you don't talk about critical illness. I know they should be, but you get the point. Your presentation needs to link to what their problem is. Sometimes you can talk yourself out of the sale. If you talk too much, you talk yourself out of the sale. Or if you talk about stuff that's not relevant to the customer, they'll get overwhelmed, they'll get confused, they'll back off. A confused mind doesn't buy anything. Okay? Once you presented the product, you then pull the rug. And what pull the rug is, you say, well, this is what you need, Mr. Customer, and you offer them the different packages, but not everyone can actually have it. This is what you need and why you need it, but you might not actually qualify based on medical. When you show somebody something and take it away, it creates more desire. It emphasizes desire. It creates FOMO, the fear of missing out. And then you move the last point into your close. Now, there's multiple different types of closes. I teach them all at the Wealthy Advisors Club. One quick one is an options close. You present multiple different products in a certain way, certain tone of voice, certain tonality, and position them in a certain way. You are going to close more. So, nice introduction. There's lots to that, likability, body language, what you say, how you say it, introduction, introduce yourself and the company, fact find, ask the right questions to create desire, pain points, problems. You summarize their situation and press on the problem. You then present the product that links to their pain points to solve their problem. You then pull the rug and tell them they might not be able to get it. And then you move to the close. If you follow that 6-step process, selling life insurance or mortgages, I'm telling you now, look at the trophies, the successes in 2 companies, and I've exited both. This works a treat. Trust me. If you want to see more of this, you want to learn about the 6 steps in a little bit more detail, It's all covered in depth in the Wealthy Advisors Club. I'll see you there.